What's up guys, it's Nick here from Nick's Taxes, and as a tax accountant, I thought it'd be a good idea to come out with a video for our YouTube creators. They're YouTube people that are part of the YouTube Partnership Program, aka the people that are making money by making YouTube videos. You've probably received an email in the past week or so letting you know that there's been some tax changes and some forms that you're going to have to fill out as a result. So in this video, as an accountant, I'm going to give you a brief overview of what's going on and why, so you have a better understanding of what you're doing and what you're filling out for YouTube and Google. YouTube is owned by Google, and Google is a US entity, so they need to comply with the IRS. The IRS is basically the US tax authorities. And so under the IRS code section 3, there's a rule in which they being Google needs to withhold taxes off US sourced income for their employees. So what was happening in the past was they were just sending out you your check, and it was your responsibility to handle the tax matters. Now Google is going to help kind of take care of the US side of things for you, and the email that they're providing you is helping Google do that with the IRS by making sure they understand what your tax situation is like from a US standpoint. What's happening is they are now considering US sourced views and the money earned off of the US sourced views as US income. Now, US income is often subject to tax unless there is a tax treaty between the United States and the country in which you are a resident of. So if you are part of the United States, you owe US tax on your worldwide income. You're going to fill out a W-9 form and send that off to Google. What that means is you're just basically providing them with your social security number or ITIN, and they're able to remit taxes on your behalf. At the end of the year, you'll receive a 1099 MISC with royalty income associated to it, and you will report that on your tax return and either get a refund or more taxes depending on what your income levels are. Now, if you're a non-US person or you live outside the United States, things are a little bit different. And here in Canada, we actually have a tax treaty between Canada and the United States saying that as a resident of Canada, the royalty income I earn from the United States can be taxed as low as 0%. Now, there's different types of royalty income, but from my understanding, the royalty income that we earn from YouTube is under the copyright section of the royalty income. And as copyright royalty income, there is the tax treaty between Canada and the United States that makes that income subject to a 0% withholding tax on the United States side. So how we make this happen is we fill out a W-8 form, a W-8 Ben, or if you're filing for a company, I believe it's a W-8 Ben E. And this basically lets Google and the IRS know that you are a non-US person and you are potentially claiming a treaty exemption on this US sourced income. So again, here in Canada, you would let them know that you're Canadian, and they would file and report the proper section of the tax treaty to make sure that they're now not withholding any taxes off of your income. Depending on the country, you might have a certain tax rate that they're going to withhold the US sourced income from. At the end of the year, you won't get a 1099 MISC form, you'll end up getting a 1042-S, which reports the amount of income that you've earned from US sources and the amount of tax that you've paid. If you've paid tax, you can file potentially a foreign tax credit in the country in which you are a resident of and claim that credit. You'll have to talk to your local accountant on those matters to see if you qualify for FTCs based on the United States income. If you don't fill out this W-9 or W-8 Ben form, Google will end up paying this backup withholding tax for you. And the backup withholding tax in the United States is a 24% rate, which means that they will automatically submit 24% of your US source income to the IRS as a backup withholding. They're basically saying, hey, we tried to get this information from our employee, they didn't respond, and now we're just going to withhold 24%. We're doing our part, and now it's on the employee to either get that money back or to square up with the IRS. If you're curious on how much US sourced income you've earned during a period of time, you got to go into YouTube Studio. You got to do it on a desktop, not using the app. Go into the revenue section, pick the period of time in which you want to see how much revenue you've earned, and then add a second metric and pick the United States or pick countries, and you can see the income that you've earned out of each country. So obviously the United States is going to be the piece that we're most concerned about, and that Google is going to be withholding taxes potentially on. So if you don't have any views generated from the United States, you won't have any income to worry about that the IRS is going to withhold from you. But if you do, you'll have to be subject to a certain tax rate from as high as 30% to as low as potentially 0%, depending on tax treaties and whatnot that we have in place. That's what's going on right now with YouTube and the content creators and tax. So if you have any other questions, you can let me know in the comments below, but I just wanted to make this quick video to let you guys know what is going on with these new changes with the YouTube partnership program. Again, I'm Nick from Nick's Taxes. Thanks so much for watching, and happy taxing.